Emons. Hi Ben, good evening here from India. This is Ruchi Bhatia. Let me first, get a sense on what's happening in the markets. We did see a rally coming in yesterday, but today investors are closely watching out for the stimulus talks. And in fact, this was something that we were expecting last month. Just about one more month to go for the US presidential elections. We still don't have any headway. How hopeful are you that there's going to be some sort of a stimulus coming in? And of course, we're also keeping a close eye on Jerome Powell's speech also a little later in the day. So what would you really be watching out for?
Hi, Rajiv. Thank you very much for having us. Well, as you highlight, so there is a confidence boost in the markets because, one, the economy shows there's actually more strength than people had anticipated. Take the services PMI and ISM data that came out yesterday in both the US and in Europe, and actually overnight in India too, by the way, that shows strength. And I think what's happening is that as the economy reopened in the second quarter and there's, activity happening with all the stimulus on top, that's, I think, the driver in the background. And markets continue to pick up on this. Every time a number comes out better than expected, the rally continues. And as you also say, there's a confidence from this, environment that we're in terms of the fiscal stimulus. In the United States, it's a slow progression in the negotiation, but there's clearly willingness happening on both sides now to make this go through. Because one, President Trump actually been really clear on Twitter when he was in the hospital that he really wants stimulus. And McConnell, who's the Senate leader, very much listens to Trump. His closest ally from Trump, Lindsey Graham, also was out there, making a case for stimulus. And as we know, the Democrats are doing that too. So it does look like they're getting together. Whether this will happen right before the election or it happens right after, I think for markets that doesn't matter too much at this point anymore. It's more that the stimulus is coming. And then if the election does lead to a different result, say President Biden, there will be even more stimulus coming in the future. So I think that's what markets are doing at the moment.
In fact, talking about stimulus, Ben, I want to get a sense from you on what the IMF chief also said today, saying that the global economy is coming back from the depths of the crisis, but the calamity is far from over. The good news is that the $12 trillion fiscal support that various nations have given are supporting the economy. We can expect better results in Q2 and Q3, and that could be one of the reasons that the IMF may just look to upgrade their global growth forecast from what they had said previously. Having said that, what do you make of these comments? And in your own experience, do you believe we're perhaps moving towards a path to recovery? And if we are, given the fact that in various other nations we're seeing lockdowns once again kick-starting, could that really once again thwart the kind of growth that we're expecting?
So the fiscal stimulus is definitely important because, as that number points out, 12 trillion is an extraordinary amount. And that's coming into the system over the last, say, second and third quarter now. So there's still very much of an effect happening as we speak. But as you mentioned too, the virus is uncontrollable at this point still. We still don't have it down in many countries to a level where we can really, have more broader activity. So these lockdowns will happen again. They will be probably more targeted in specific cities and areas as opposed to a full nation-wide lockdown, because that is too much of a constraint on growth. So the upgrade of growth that's coming from the IMF factors this, I think, in that although there will be lockdowns, the fiscal stimulus is so substantial and more added to it as we go from here, because Europe agreed to a fiscal stimulus and they have not yet spent that money. As we just discussed, the US is still in negotiation for more stimulus. So I think this all factors in a growth trajectory that could be higher than what was initially foreseen. Also now, for example, as highlighted by the Federal Reserve, Powell is important today to hear about that too, that the assumption that the central banks have made is actually for a lower number of fiscal stimulus that would maybe be coming. All of that factors into this higher growth number ahead of us, despite the risk of a lockdown again, which I think will be more targeted rather than nationwide lockdown.
Right. Having said that, Ben, before I let you go, I have to ask you about, your expectations from the upcoming presidential elections. What are you, the kind of trading strategies that you're looking at this point of time, given the fact that there are, the first debate that we saw. Out of the three debates, we did see both Donald Trump and Joe Biden really trading barbs at each other, and really it goes on to show the kind of debates that we can expect, the next two debates as well. Having said that, what how are you guys balancing your trades during this time, and does that mean we're in for a little more volatility than what was being expected?
We can still expect volatility because as the outcome is not certain. The polls indicate that Biden has a major lead at the moment, but that can change within a number of days or hours even, right? So there's still a lot of uncertainty there who will ultimately be the winner. In addition to that, we do deal with the mail-in voting that because of the coronavirus could actually delay potentially the result, at least on November 3rd. And importantly too, to this, at least for the United States, we have a Senate race which investors will be closely looking at. Currently, the Republicans have the majority in the Senate. That may go towards the Democrats. So how much more will the Democrats have a majority, yes or no, in the Senate? That's still unclear too. So that causes the volatility. But important is to think about the election as in a rotation idea. So the economy reopened, whether President Trump will win or whether it's incumbent President Biden will win, both of them will keep the economy open and will work on this health crisis to keep the economy going forward. So there is a rotation happening from this really stay-at-home, very safe environment where stocks like technology outperformed to what we call the reopening, which are more cyclical companies that are focused on leisure, hospitality, and other growth areas. I think that is the major trend here that we're looking at. And to that is that as we move on, as growth picks up, there will also be rotation probably out of fixed income where yields are just really, really low still to more growth areas, including in equity. So I think those two will dominate around the election. Despite the volatility, I think investors stay pretty upbeat that the economy will remain on track and that the reopening can become larger by next year. And therefore, you want to be a more cyclical sector than in this very defensive sector.